Good morning and welcome to the Killik & Co market update. Interest rates continue to be a big theme and there is still a big question mark over when they might start to come down. At the end of last year, the thinking was very much that the US had done a great job at getting inflation under control and therefore that the US would be the first country to drop interest rates, and at the time the UK felt very far behind. However, this week the headline rate of inflation in the UK has dropped below the headline rate in the US. Here's a 5-year chart showing UK inflation in the green and US inflation in the pink. And you can see the US rate has been flatlining since June, whereas the UK rate has been on more of a downward trend. Previously on this video, we've looked at the CME FedWatch tool, which is a data table produced by a company called CME, and the tool measures how markets are being traded and it measures when interest rates are expected to move. At the next Fed meeting in May, you can see there is a 5.86% chance of rates easing and no chance of them going up. It's not until the September meeting that the chance of rates coming down is greater than 50%. Expectations for the first US rate cut keep being pushed later because inflation has been sticky. Concern has been growing this week about the tension between Israel and Iran, and we are starting to see evidence of this concern in the market. Firstly, we have the VIX, also known as the Fear Index, which measures expected future volatility. This is a 10-year chart, and you can see a noticeable spike in the last couple of weeks. The Middle East is still responsible for a significant proportion of global oil production, currently around a third, and any problems in the region do lead to concerns about reductions in the supply of oil and therefore about a rise in the price of oil. We've seen shares in oil companies rising on expectations of higher oil prices and therefore higher profits. Here are BP and Shell over the last decade. They've mostly tracked each other very closely, although BP has dropped behind a bit of late, mainly due to its leadership problems, but both shares are up sharply in recent weeks. And finally this week, the IMF has published its latest growth predictions for different countries around the world. The middle data column shows the expected growth for this current year. In terms of developed markets, the US is leading the pack with an expected rate of 2.7%, whereas the UK is far behind at just 0.5%. Developed economies are growing much more quickly. India, for example, is expected to grow 6.8% this year. And we often say that markets move based on what is expected to happen rather than what is happening right now. And if we look at the strong performance of the Indian index, we can see that these strong growth expectations are reflected in the market. Next week, we have got a very full calendar with earnings season in full swing. Results are due out from the big tech companies Microsoft, Alphabet, and Meta. That's it from us. Have a great weekend, and we'll see you next Friday.